Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of trading with the Visual JForex, we are going to work with a very well known, very simple, and very liked indicator in the stock in the forex in the commodity market because this is one such indicator which is quite easy to understand, quite easy to use, and most of the traders, if not all, are familiar with the workings of the stochastic. And even back in time when I started trading, this was one of the very few indicators I was working with as it provided ease of understanding. In today's session, we are going to look at the possible uses of this indicator, and I am starting this series with the stochastic simply because this is a simple indicator and it will help you grasp the concept and the format using this indicator better, and that is the main reason behind starting these series with the stochastic. Now let us go to the Visual JForex platform where this indicator stochastic is listed amongst the momentum indicators. This is the list of the momentum indicators, and here at the bottom you will find these three indicators which are different versions of the stochastic fast, and stochastic RSI. We will first consider the simple version, and afterwards we will also look at two derivatives of this indicator, the stochastic fast and the stochastic RSI. Let me get this indicator block in place, and now we try to understand its component, what it is made up of. You need to define the instrument. Along with that, you need to define its candle period, its look back period, its two components, two very important values, the percent K and percent D. Then you also have to define the kind of percent K, SMA, or moving average you want, because for the percent D we simply take into consideration the moving average of the percent K, and the way you define this moving average is going to hugely impact the value you get for the percent D, and resultantly the output generated by the indicator. So this platform gives us the freedom, gives us the ability to get the moving average of our choice. We can define the moving average as per our requirement, as per our liking, and optimize the indicator in a best possible manner for our trading strategy. This is a simple indicator, and to give you some of the examples of its uses, I will take you to the JForex platform where we will add the indicator to this Euro USD chart. In last few weeks, the Euro USD has seen this slightly bullish momentum. It is basically moving in this upward trajectory with the consolidation, sometimes taking it back towards 1.075 level, but overall its trajectory has been positive. In the first week of this month, it gained ground and it gotten close to the 1.1 mark. In last session, in the 15th August session, we saw this sharp decline from 1.1 to 1.95, but after finding support, it has again bounced back and it is now trading not very far from these recent swing high touched at 1.04. Its trajectory has been bullish, and I feel in the current trajectory it is having this momentum on the bullish side because the dollar has been retreating against most of the currencies, the euro is also seeing the similar trajectory where the euro is gaining ground against the US dollar. At one point, the price level of 1.1 seemed too far away from those levels close to the 1.05, 1.06, and it was not really showing any signs of starting this upward rally. But here we are now looking at the trading possibilities, trading opportunities with the euro getting close to these multi-year highs of 1.1. For adding the stochastic indicator, all you need to do is quick search. If you type in stochastic, here you get it. We have this couple of stochastic indicators provided to us on the platform. In this charting, you can see that whenever there is a sharp move, we see these equally sharp moves in the plotting of the stochastic. Its percent K line and percent D line is quite responsive. You won't really see much lag in the plotting of the stochastic indicator following any sharp move on either side, whether it is bullish or bearish, is usually immaterial. But the kind of volatility there is, the kind of range that gets enlarged, we will see sharp, equally sharp, if not more, moves by the stochastic, and that makes it quite a reliable, quite a responsive indicator to work with because as there is not much of a lag, you will immediately be able to define the momentum and then you can work with this indicator to find newer opportunities to trade and invest. Now, in today's session, we have seen the Euro USD slowly and steadily start climbing from the levels of 1.09709.8, and from there on, it has rallied close to 40 plus pips, and even at the current juncture as we are talking about the stochastic indicator, it is having bullish momentum. And my sense is, given the price formation of high highs and high lows, we are pretty much likely to see the euro USD climbing past 1.104 level in coming sessions, if not today itself. We are now reaching the closing of the market, but once we are back on Monday, we are likely to see the resumption of this bullish momentum, and at that point in time, over the next week, we are likely to get opportunities to trade in this bullish momentum, with the possibility being on the higher side of it continuing to run higher and higher while making the price formation of higher highs and higher lows. For Euro USD, if you want to use the stochastic, there are multiple ways. The very well known way to use it is to simply look at the crossover between percent %K and percent %D lines. Usually we see these crossovers happening quite fast. As I said earlier, also there is a responsive indicator and it doesn't really experience much lag in the output. Now, if you consider these output values of the two parameters, the percent %K and percent %T, the general understanding is that whenever the percent %K line is trading above the percent %D line, that indicates the initial momentum, or you can say immediate momentum, being on the bullish side, as the percent %D line is simply the moving average of the percent K, and if you see the percent K is trading above percentage. That means the immediate price action is stronger than the average price action. That is going to reflect on the bullishness of the price formation. In this session, we will be working on the simple formats so as to keep things easy to understand and interesting at the same time. For the stochastic, I would say that the momentum is quite important. We don't really want to get involved when the momentum is strongly bullish or strongly bearish. But sometimes those kind of challenges also arise, and for that, we have to fine tune, we have to look for the price formation and the indicator formation can help us through those challenging times. For the crossover price formation, we have these strong bullish momentums and strong bearish momentum. Many a time what happens is that if you are using the stochastic indicator in a classical way where we use it for defining the overbought and oversold scenario, you would have to then figure out the possible combinations. In the current session, I will simply giving you a brief idea of the kind of structure which we are going to build in the Visual JForex, but that is going to take time. We will need at least couple of sessions. We are not really going to get it done in a single session. As I said, there is a momentum indicator. That means the momentum has to be on our side. But we also have to keep in mind that consolidation might happen, the extended consolidation might happen. And in those kind of circumstances, if we are able to work in such a way that our false signal generation is at minimum and we are able to get these price filtering mechanisms in place and minimize the kind of signals which are generated to only signals which are highly reliable. In the stochastic, you will see continuous changes happening. Sometimes it is in a overbought territory, sometimes it is in a oversold territory, and then the crossovers also happen when it is well within these normal price bands. If it is below 80, also that doesn't really mean that it can't go any higher. It might go higher. It is going to experiences some turbulence in the higher volatility situation, but apart from that, whenever the range is narrow, we can employ this logic of seeing the stochastic keeping closer to either overbought or oversold scenario depending on the price trajectory. And for simple uses, the stochastic is going to be a fantastic indicator, and for defining and designing the algorithm, it is going to be a bit challenging. It will take a lot more time to devise the mechanism for the profitable use of the stochastic indicator on the Visual JForex, because if we see the charting only, then we will get the concept of it, but the market is a dynamic place. Many times it is not going to behave as per the theoretical expectations, and it will keep reacting to different situations in a different way. That makes it quite challenging for defining the algorithm which is going to work well, which is going to be reliable over the period of time, and that increases the challenges, the kind of challenges which we face in defining the algorithm on the platform of Dukascopy. For the stochastic, what we can do is keep its price formation simple while at the same time working with the momentum. Now, I would say if the momentum is bullish and whenever there is some correction, then consolidation and further rebound, we can go with the flow and we can try to take advantage of the situation by relying on the crossover price formation. So if you want to work with the momentum, then keeping the buy trades strictly for the price levels for the output levels of the stochastic with percent K and percent D value being about 50. So instead of taking the classical interpretation of it being closer to the overbought territory, we will go with the momentum and also at the same time ensure that there has been correction, there has been consolidation, and we are getting involved only after we feel that the momentum is strong enough for the continuity. Then we can reverse the charting and for looking the opportunities on the short sale trade, we can also take into account the momentum and go for the short sale trade only when the output value of percent K and percent D is below 50 mark. So this way you will also consider the consolidation possibilities that it might remain in a narrow range with it moving in a tight range and also the momentum being bearish. Many times, if you don't take into account these kind of situations, you might get in trouble. So it is quite important for the development of the algorithm that you consider this possibility that the underlying instrument might not keep moving all the time. It might remain in a narrow range for a long time. While at the same time, we have to be prepared for any big rally happening at any juncture. So that makes it quite challenging for the creation for the development of the algorithm and those difficulties we will have to take into account and try to figure out the ways. So one of the way I have tried to explain to you is simply looking for short selling opportunities when the price value, when the output values of the percent K and percent D are below 50 mark and going for the long trades only when the output values of the percent K and percent D are above 50 mark and then you want to get involved when there has been correction while the momentum has not really changed. There is a possibility of it continuing to move higher after the recent D, recent decline or recent rise as the case may be and we are now gearing up for the next trade after the approach being buy on dips or sell on rally. You can look for the optimum ways to maximize your profit. And for the stochastic indicators, I have tried to explain to you the basic concept of it. If you have any query regarding the uses regarding the algorithm development using this indicator, please write to me. You can write to me now, you can write to me later as per your convenience, and I will try to answer your queries in a manner where we will be able to further gain insight into the workings of the stochastic indicator. And I feel with the paucity of time, we are not really going to be able to develop the algorithm in a single session. And today, I will limit the session where we have considered the basic properties of the stochastic indicator, its representative block on the Visual JForex platform. I have also showed you the kind of adaptive uses and the values which we need to put in for these indicators work using these platform. Now we have to look at a basic idea which is going to be also reliable to the best possible way, because development of the indicator development of the algorithm using these indicators is going to be a tough job, and not all the algorithms which we develop are going to be profitable. Sometimes it is going to work, sometimes it might not really work. So that is also going to add to the challenges of working with the indicator on the JForex as well as the Visual JForex platform. Now it's time for me to say goodbye for the day. I'll be back tomorrow with equally interesting indicator to work with. See you next time around. Till then, have a fabulous time ahead. Goodbye.